Couple of mid-cap stocks then, and we're joined currently by Mr. Manish Mandhana, the Managing Director of Mandhana Industries, who joins us on the show ahead of the big listing. That's Mandhana Retail Ventures listing. That's scheduled for tomorrow. Thanks, Manish, so much for joining in today. First things first, all investors out there in terms of subscribing to tomorrow's issue or all those already hold shares by default, they want to know, in this entity, that's Mandhana Retail Ventures listing, what is the debt in the books currently?
Well, Nigel, morning. When the company was demerged, I think the debt that we stood at was approximately 17.5 crores, which has been reduced to 7.12 crores now because we've paid off the rest post demerger. So as of now, the debt is about 7.12 crores.
Okay. Could you give us a sense of how many stores would Mandhana Retail have? What would be the expected revenues, say in FY17, as well as the expected EBITDA of your pure retail arm now?
Ever since its inception, the brand being human, I think as on today, we have a wide network. We are present across 700 point of sales globally. We have 60 exclusive brand outlets, out of which 4 are internationally established, 1 in France, 1 in Mauritius, and 3 in Nepal. Alongside, we have presence in all the large format stores of the country, which is Shoppers Stop, Globus, Central, Lifestyle, Splash, and so on. Also, we have a distribution network across the country in the States where there is not too much of organized retail. And of course, we have presence across online stores, and we have a huge tie-up with the Landmark Group in the Middle East where we have 130 point of sales.
Okay.
Also 75 point of sales in France.
Okay.
Okay. Manish, if you could just tell us then the revenue and the EBITDA profile of your retail arm then, say by the end of FY17.
Well, so far we've been able to, maintain a very healthy EBITDA in the range of 24-25%, and we wish to continue that purely because 30% of our business is exports, which brings us good revenues, and also the duty drawback rates have been increased, which is added, to the bottom line.
Okay.
And I think we wish to maintain the same EBITDA levels of 24-25% going forward.
All right, Manish, what about, the first half of the year? You've done fantastic numbers. I mean, the top line growth has been 22%, margins of around 25%. Can you replicate this? I think last year you done around 210, 215 crores in terms of a top line. This time, can we see, more than 250 crores? What is the number you're working with? Because you're talking about margins of 25%.
Well, we are easily looking at 20-25% growth again this year, and frankly speaking, the second half of the year is always the bigger half because it has all the festivities, wedding seasons, and also winter, which is more. Our average selling price in winter is way more higher because we do products like jackets, sweaters, and heavy winter wear. So our average selling prices increase as well, and added with festivities and wedding season. So it's always the case that the second half is bigger.
Unfortunately, Manish, this time in the second half, we've had demonetization as well. Can you quantify the impact of demonetization on the company's business in the last 45 days? What's been the hit?
Well, frankly, the first 1 week post demonetization announcement was a little, topsy-turvy, but we recovered fantastically well immediately after a week, and November was a little bit of slowdown, but towards the end. But I think December we are back again in business.
All right, December is the big month when, in fact, you have Salman Khan's birthday as well, and normally I'll do very high sales on the birthday. So I think last year a big chunk came in on that day. Could you tell us what exactly was that number? If I'm not mistaken, it was 10 to around 11 crores. That's number one. And second part, you're talking about your exports. But in terms of what you've done at the halfway mark, I think the sales are down over there. Are you looking at a pickup in the second half of the year?
Yes, definitely. We are sitting on good orders in hand. Of course, exports had slowed down a little bit very marginally because of the crisis of oil in the Gulf, which is our main country where we export. But as far as the growth in India is concerned, we've exponentially grown because there are new point of sales which we are opening, a lot of new stores in the pipeline, and I think we are just at the tip of the iceberg with this brand because it's just been 3 years, but we've still got a lot of ground to cover, and there's a lot of potential to grow further because we still have to penetrate the
Sure.
Indian geography in general.
Would you look at tying up with other brands?
Well, as of now, Mandhana Retail Ventures has been formed to separate the retail business. That was the objective, and obviously we are looking for some good ideas and some good asset light ideas which can churn out into big businesses, similar to being human, and we are open to it, and obviously we would be looking to add some new retail concepts in the near future.
Manish, what's the promoter stake currently? Because I remember prior to demerger it was at around 74%. What has it come down to?
As on today, it's at 56%.
56%. All right.
Okay. And if you could also give us an update on the parent company, what's the total debt? And there you were awaiting an approval from the banks on the strategic debt restructuring. Could you give us an update?
Last 6 months have been a little tough in terms of liquidity for the parent company, and obviously we are in dialogue with the bankers, and they have invoked SDR, and we are on our way to restructure that company, and we are still in the midst of the dialogue with the bankers.
All right, Manish, thanks so much for joining in. All the best for the listing that's scheduled tomorrow. Just an alert to all our retail viewers out there. Remember, the stock that's gone up is Mandhana Industries. That's up close to around 20%. Now, that's the parent company. This company that Manish was just talking about is Mandhana Retail Ventures Limited. That's the one that will list tomorrow. The mother company, that's Mandhana Industries, that's the one with the debt that they're talking with regard to an SDR with banks, etc. But the commentary that's coming in is not for this listed company. It's for the company that's going to list tomorrow itself. And the demerger that took place, it went the retail business close to around 2 months back. So just alerting our viewers that by buying this, you're not going to be getting those shares that will list tomorrow. If you had to get it, you should have got it around 2 months back. That in fact, tomorrow between 9 to around 10 a.m., you'll have pre-open, or there you'll, the price will be ascertained, etc. So just keep that in mind. By buying this share today, you're not going to be eligible for Mandhana Retail Ventures Limited tomorrow.